For thousands of years, gold has symbolized wealth, power, and security. Empires were built chasing it. Wars were fought to control it. And even today, it is treated as the ultimate financial safe haven. Yet in the modern world, something far more essential has quietly surpassed gold in value. Not oil, not technology, but water. The resource that falls from the sky and flows from our taps is now being priced, traded, restricted, and fought over like a precious metal. The real mystery is not whether water has become more valuable than gold, but how this shift happened while most people barely noticed. For most of human history, water was never considered wealth. Civilizations formed around rivers because water was reliable, not scarce. The Nile, the Indus, and the Tigris-Euphrates supported millions precisely because their flows were predictable. Water was life, but it was not currency. Kings taxed land and grain, not rivers. As modern societies developed, this assumption of abundance continued. Cities, farms, and industries were built on the belief that water would always be available. Governments treated it as a public good, keeping prices low or free and investing in dams, pipes, and reservoirs designed for stability, not scarcity. The problem began when demand quietly outpaced nature's ability to replenish supply. During the 20th century, groundwater pumping expanded dramatically. Farmers drilled deeper wells to increase food production, cities drew more from rivers, and industries used water as if it were limitless. Because water was underpriced, there was little incentive to conserve it. At the same time, the global population exploded, multiplying demand for food, energy, and consumer goods. Agriculture alone began consuming most of the world's fresh water. Aquifers declined, rivers weakened, and lakes shrank, but the changes were gradual enough to ignore. Everything accelerated when climate patterns shifted. Rainfall became unpredictable, droughts grew longer, and snowpacks that once fed rivers began to fail. Regions that depended on stable seasons suddenly faced uncertainty year after year. Water scarcity was no longer just an environmental issue. It became an economic threat. Governments began assigning prices to water use, corporations secured long-term water rights, and bottled water companies expanded aggressively. In some regions, water markets emerged, allowing rights to be bought and sold like financial assets. Scarcity transformed water from a basic utility into a strategic resource. Once water had a price, investors followed. Financial institutions tracked water stress as a risk factor. Infrastructure funds poured money into pipelines, treatment facilities, and desalination plants. The logic was simple and unsettling. Gold is valuable because it is rare and desired. Water was becoming rare. And unlike gold, it has no substitute. You can live without luxury goods. You cannot live without water. As scarcity increased, its value surpassed anything gold could offer. The breaking point came when scarcity met inequality. Wealthy farms and corporations could afford water rights, while small farmers lost access. Cities faced impossible choices between households and industry. Some urban centers came dangerously close to running out of water entirely, imposing strict rationing and emergency measures. The consequences spread quickly. Food prices rose as irrigation failed, energy systems suffered, public health risks increased, and poor communities spent a growing share of their income just to secure clean water. Water, once seen as a human right, began to resemble a luxury. Attempts to fix the crisis often fell short. Conservation campaigns helped, but could not offset massive agricultural demand. Desalination offered new supply but required enormous energy and cost. Recycling and reuse expanded, but remained limited by infrastructure and governance. The deeper failure lay in management. Water crosses borders and ecosystems, yet it is controlled in fragmented, political ways that prioritize short-term relief over long-term resilience. Today, the pattern is clear. Regions with abundant water gain power. Nations invest in upstream control of rivers. Corporations secure exclusive access to aquifers. Less than 1% of Earth's water is accessible freshwater. Yet demand continues to rise while supply grows unstable. History shows what happens when essential resources become scarce. Inequality deepens and conflict grows. 3 lessons stand out. First, water is more valuable than gold because it underpins everything: food, energy, health, and stability. Second, scarcity is largely man-made, driven by mismanagement and delayed action. Third, whoever controls water in the future will shape global power. Water did not suddenly become valuable, it always was. We simply forgot until scarcity forced us to remember.